Now, Coach Merkle, we're gonna draw up Roth conversions. You're not moving over to the board,
No.
but Roth conversions are something that people can use in their retirement plan, but definitely in market volatility times.
It certainly can be a really effective play. What a Roth conversion is you take money from your pre-tax IRA and you shift that over to a Roth IRA. Now, in the year that you shift it to the Roth, it is going to be taxable at your ordinary income tax bracket. But once it gets to the Roth, it grows tax-free forever. And this is one of the ways that the conversation that you're having with your advisor can be incomplete if you don't talk about this type of play. If the advisor just says, don't do anything, just hold tight, and you don't discover, does a Roth conversion make sense or not, then you could be missing out. That's an incomplete conversation. But it can be really powerful when the markets are up, but it can be even that much more powerful when the market's down, because you're going to get that growth back when the market comes back. It's either, do you get it back underneath the taxable account, or do you get it underneath the tax-free account? And we really like tax-free growth.
And Clint, some people will really appreciate seeing what this looks like in numbers.
Yeah, if we were actually going to think about a particular family, and this is part of that more comprehensive retirement plan, is we want to be looking at what opportunities you have to reduce your cumulative tax bill in retirement. So in a particular year, we might have identified and earmarked that we want to convert about $50,000. Now, if the market is kind of at a higher point, maybe a company share is trending at $100 per share. If we were to convert that $50,000, that would allow us to shift 500 shares from the pre-tax to the Roth bucket. But if there's market volatility and that company's share price is trending down at 80, and it doesn't have to be a one particular company, it can be a fund, it could be an ETF. We're just using this for the purposes of understanding how many more shares you could get. You'd have 125 more shares that you can convert with that $50,000. 625 versus 500 if you convert it at a higher point in that year when the market is a little bit of a higher point compared to if we converted at that lower point. So you can see now we've got 125 more shares that we were able to convert, and like Loren mentioned, that's going to be able to grow in that tax-free account moving forward.
And sometimes one of the questions people have is, do I have to sell my shares in order to convert? And you don't have to. Sometimes you might want to sell those, but in the case where the market's really bouncing up and down, if you have XYZ stock in your pre-tax IRA, you could just take 50 shares of XYZ stock and move it to your Roth, so you don't have to worry about missing out on any of the gains that could take place while you're making that transition. So you do have those options when you're making that Roth conversion.
And also, sometimes a Roth conversion does make sense, though not in times of market volatility too. This can be a part of a retirement plan throughout retirement, even before you retire too.
Yeah, and it's something that we want to sit down and help every family evaluate year in and year out. What tax opportunities are there? What strategies can we help you execute to help you lower your cumulative tax bill in retirement? Roth conversion can be a great strategy, and there are many more that are out there. And we always want to make sure now that we're thinking in retirement, let's not just make investment decisions, but let's see how that investment plan filters into the tax plan, as you can see, and all those different parts of an overall retirement plan. It just starts to be a really different conversation, a different way of looking at your investment portfolio than maybe what it's been during your working years.
One of the benefits of having a plan, a proactive plan, is in times of uncertainty like right now, you already know what your Roth conversion capacity is going to be. I just had a conversation last week with somebody. We knew that he was going to convert 30,000 this year, because when it comes to Roth conversions, priority one, does it make sense to you from a tax standpoint? And if you can answer yes to that question, now can we time it with some of this downward market volatility to improve the benefits of that Roth conversion? So he sent me an email. He said, hey, Loren, is it go time? Is it go time? We know we want to convert 30. Is this the time to convert at least a portion of that? Yep. And we concluded based on our conversation, yeah, we're not going to do the full 30. Let's do 15. And then we have some room to do the other 15 later down the road if the market keeps going like this.